Hey, welcome back to my channel. In this video, I go through how I analyze various Airbnb opportunities. So let's go straight to the video. Okay, so let me look at how I put together an Airbnb deal. Now, the first thing I want to do when I'm analyzing it, I'll take usually a sample of 4 or 5 properties that are similar to the one I'm thinking of purchasing to put on Airbnb, and I'll run a type of analysis on these. Now, this is an apartment I found. It's a luxury St Kilda penthouse with spa. Now, then I'll go to the various websites or real estate websites and see what they have on their books. This is probably the most similar to that one, which is for $980,000, a 3-bedroom, 2-bathroom, 2-car park apartment that's going for sale. So we're going to assume that we're going to spend $1 million. Now, what I want to do, I want to have a look at the option and work out what's better, whether I purchase a 3-bedroom penthouse or sub-penthouse apartment to put on Airbnb, or whether I am better off purchasing a number of 1-bedroom apartments up to that same value. Now, this shows that for around $1 million, I could get 2 of these 1-bedroom apartments, 1 bedroom, 1 bathroom, 1 car park. Doesn't quite get us to the $1 million. So what I need to also throw in there is probably a studio apartment which you can pick up for around between 240 and 260,000 to balance it off. So that's what we'll be comparing here. We'll be comparing in the analysis, is it better to spend $1 million on 1 large property or 3 smaller properties? Now, this is a question a lot of people will be working out. Is it better to buy a 1-bedroom apartment for Airbnb versus a 2-bedroom, etc.? So you'd be able to run this same type of analysis to see which way comes up better. So what I then do is, knowing the value I want to spend, I come up with what the actual cost will be to purchase that property. So, as I said before, I'm going to spend $1 million, including legals and stamp duties and other fees. And that will get us, in this case, a studio and 2 times 1-bedroom apartments, or a 3-bedroom apartment. I'm going to finance this apartment, so the actual amount is going to be fully financed for the purposes of this. The days, the interest on that, I've assumed 5%. I can get rates a bit less than that, around 4.10, but that's going to give us an interest rate of $50,000 per annum. And I've broken that down into a daily rate. So I've taken that number, divided it by the number of days in the year, being 365, to come up with a daily rate. I've also worked out here what the rates and property taxes will be on a per day rate, which is $5. The utilities, which is your water, gas and sewage, usually comes through around $5 a day. You will probably need to check your own utilities to come up with that actual number. Because I've got 3 apartments here, I'm going to be spending $7.50 a day on Wi-Fi. Now that's assuming Wi-Fi between $60 and $65 per month on an unlimited plan. When it comes to Airbnb, you definitely want an unlimited data plan. If you're starting to get excess charges after a certain amount of data, that can be a bit of a problem if you get a guest in there streaming movies or downloading games or doing it all working from home and using large amounts of data. I've also got a line in here for the management fees. This is if you're outsourcing the property. I've assumed in this case that I will be doing all the management of the property. If you were to outsource, this comes in at around 12 to 20% of your overall revenue. So if I factored in something in the middle, just to give you an idea of how much that equates to, for someone to manage that property, you would be paying out at 15% around $42 a day. And then I've got in here a maintenance allocation. This is money I keep on hand for repairs and maintenance. Apartments always, there's a bit of wear and tear, so you want to make sure you are keeping funds aside, when it comes time to repaint or fix breakages, etc. Now, so they are the costs associated with owning 3 smaller apartments. So the actual amount is $167 a day. So that is your daily cost. So when you go out and look at various Airbnb properties and what they're earning, you want to ensure that they are making more than $167 a week. If there's Airbnb or a majority of Airbnb in your apartments in your area are not making around this number, and you want them to be making substantially more, you know that it's probably not a great opportunity. Now, for the 3-bedroom penthouse, we've worked out that will come in at a cost of $152. So you can see the daily cost on option 2, which is the larger apartment, is a bit cheaper than buying these 3 separate apartments. So knowing those numbers, what we then need to do is go and work out what type of revenue or income we think we can receive by having these properties on Airbnb. Now, to do that, I go to the Airbnb website, and I'll get, depending on how confident I are with the numbers and the spread, I'll usually get between 4 and 5 similar properties to the one I think I'm buying or thinking of buying, and I'll do the following analysis. So I've come up with this one, which is a luxury St Kilda penthouse with spa. They've advertised it at $225 per night. That's good. He's telling us exactly. So I know that already $225 per night is more than the 152. So on that basis, I can assume that it should be profitable. Now, the other thing I want to check is how much vacancy is in this. Someone might have an apartment at $225 a night, but it might be vacant 70 to 80% of the time, which is not what you want. You want your apartment to really be in that sweet spot of around 80% occupancy per month. So if you know you've priced your apartment where you're consistently getting around 80% occupancy, you know it's priced in the sweet spot. So how do we do that? From just looking at the Airbnb website and looking at various apartments, this is how I do it. Now, there's a lot of transparency in the Airbnb website, which allows you to go in as a guest and check out the calendar. So I can look at the calendar, and straight off I can do a quick calculation that in March he's only got 7 days unbooked. So I divide that 7 days by the full days of the month, and he is at 77% occupied. Now, this is basically now the end of February, and I would imagine that he would be around 80%. So that number stacks up. Now, looking out to April, again, he's at 80% occupied. Now, I do another video on dynamic pricing and how these percentages relate to how you should do your dynamic pricing. But just based on what I know, that if this had been around anywhere between 60 and 70%, I wouldn't be panicking yet. April's actually a good month for him, at 80% vacants, 80% occupancy. And then May from, we're at February here, this is sort of 2-3 months ahead of time, and he's at 42%. So I would actually expect him to be around that. A lot of bookings come in around 30 days before, so he's actually booked a little bit ahead of time. That could indicate that his pricing is a bit lower than other properties in the area, or he's attracting a lot of early bookings, which is why I'll go through and do 4 and 5 properties. I'll do this type of analysis so I can basically work out where the median is, and that I haven't just analysed something that's a bit of an anomaly. And then June, which is 4 months away, he's at 10%. Look, you do not get many bookings 4 months in advance. You might get the odd overseas booking, that type of thing, but most bookings will be within, a large percentage will be within 45, closer to 45 days out. You'll start to see all your bookings for the month. So at the middle of April, I would expect him to be around at least 60% occupied, and then coming into May 70%. But as I said, there's another video I do on dynamic pricing and how to get up to that 80, 90, even 100% occupancy. Now you can see here $225 a night, which is a good number. Now I don't just go back and plug in this 225, and there's a reason for that. This $225 per night is the base rate that the host has put on this property. It doesn't mean he is actually leasing or renting this out at $225 per night. He might have this base rate at that, and then he might adjust his calendar, and the nights might be actually either lower or higher. So how do we try and work out what the actual numbers are? What I will do, I will go into the calendar, and I will put in a false booking, or I will put in an inquiry. Again, the website allows you to go in, put in your dates, and see what the prices are. So I have started off by putting in June. Now June is basically the low season, and he is charging $259.50 per night. Okay, so I know that he isn't charging below market value. So we've now got a sample of what he's charging out for the low period. If I'd been really looking at this over the long time, I would have been looking at his rates, ahead of time for what he was charging for March, April, May, and seeing how that equates to these type of bookings. So he's charging $259.60 a night. Now that's the low period, so I'll take a sample of the low period. I will then go and take a sample of, now I do this for my own interest as well. I also like to see if people have adjusted their calendar for the peak period of New Year's. New Year's that New Year's week is usually a big week. You can see he's already factored in that he'll be charging $465 per night. Now that's quite a way into the future. Whether he adjusts that down over time, we don't know, but that's what he's expecting, $465 per night. Now a lot of people will have their calendars only set to 3 months ahead of schedule. I don't do that, and there's a very good reason why I don't do that, but I've just noticed looking at people's calendars, I'll just have it open for 3 months ahead. And the other thing I look at is the next peak period, which is in this case January. So for January in Melbourne, it's definitely the peak. Look, there's a lot of sporting events combined with the summer holidays. The Australian Open tennis is there, which basically sees every hotel in Melbourne fully booked. And he's got that priced at $333 per night. Now, how do I factor these numbers back into the daily rate? Now, what I do is I take the rate here from the low period, which is the $260, and based on what I've seen with these bookings, I take $260 per night. I assume an occupancy of around 90%. You can be more conservative in your analysis if you'd like and have that set to around 80%. And that works out at being $85,410 per annum, which is an average per month of $7,117. So that's his average revenue before costs each month. Now, I want to just do a quick adjustment for the peak period, so we've picked up some of the seasonality. So, peak period, I assume he's going to be looking at $9,900. So what I will do there, and I'm assuming he will be 100% occupied during that month, and I plug in the peak month, $9,900, to come out with a figure of $88,192.50. Now I divide this number by 365 to get a daily rate of $241.62. So that number basically falls in line with the numbers I've seen here, $225 plus where he's actually booking things out at $259 a night. So I'm basically happy that that is the average rate that he will get based on around 80% occupancy. There's always the chance that he can go to 90% occupancy, or you can manage it to get a little bit more. But you know, once you've done this across 3, 4, 5 properties, you'll start to get an average, and you'll start to see where it all falls in place. So I come back into the sheet and I throw in the $242. Now this comes up with a profit per night of $90. Now $90 per night. We now want to have a look at what this person's overall net operating income is per annum. So we're now working it back on a yearly total. So at $90 profit per night, his net operating income is $32,705 per night. So not a bad number. Now net operating income is basically your gross income. So how much you earn minus all the costs. The figure that then is derived is your 32,000, which is your net operating income. Now let's compare this to the option of, with the same purchasing power of $1 million, purchasing a studio, 1-bedroom type, 2 1-bedroom apartments. I've done the same analysis on other studios that I've been able to find and 1-bedroom apartments in the same suburb. You could be comparing different areas against each other, different suburbs, to work out what the best return is. And this comes in at a profit per night of 118. So just based on this, I can look, okay, profit per night, we're going to be making an extra $28 with this option. And their net operating income comes in at $43,063 versus $32,000. Now, one thing we also need to factor in here is your ongoing cash flow. Now, in that first year, the studio and 2 of the 1-bedroom apartments are going to need a larger setup than the 3-bedroom. You're going to have the same number of beds, but these ones are going to need a lot more furniture, etc. So what I do, we need to factor that in, the fact that There's some additional costs that is going to affect your cash flow in that first year. So you're going to need 2 additional fridges, 2 additional washer dryer combos, 2 additional TVs, assuming the penthouse only has 1 TV. You're going to have to set up the kitchen 2 more times. That's the cutlery, cups, cooking utensils, etc. So you need to factor in. So factoring around $5,000 more of cash that needs to come out if I go for option 1. The other thing, you might have more furnishings in there, so you might need additional couches, etc., etc. So you need to factor all those in here, because this is going to affect your cash flow. Now we just need to look at how this works out on a cash flow basis. Now I've taken a 10-year period. You might take a 5-year period, 7-year period. I've chosen a 10-year period just to see how it pans out. So option 1 is the net operating income, even once I've taken out these additional costs to set up, is $5,000 more. Year 2, it's $10,000, $10,000, $10,000. So this is coming in at, after 10 years, by going with option 1, you'll be $98,000 ahead. Now the good thing of looking at these cash flows is you might have a large setup for one of the options, which means your cash flow in the first year, it could possibly even be negative. But over the course of an extended period, that option might be better. So for instance, say if I had to put in furnishings, and the furnishings to set that up was going to be $20,000, you'd see in that first year, in the setup costs, our actual cash flow would be behind. So option 1, if I only looked at that as that 1 year, I'd be saying, oh, option 2 is way better, because look at this. I'll be $34,000 better off by going with option 2. But you really need to look at it over an extended period. So after 5 years, by going with option 1, you're $6,000 ahead, and after 10 years of option 1, you're $58,000. In this case, the setup wasn't like that at all. And after 10 years, option 1 is clearly the winner at $98,000. And you can see that just based on some real estate measures that they use. One being the cash on cash. Now I'll explain these in another video. And the other being the yield, or also known as the cap rate. Now the cap rate is basically the amount of income you receive, which is the gross income, divided by your purchase price. So you can see here that just by looking at a number of things, the cash on hand, the net operating income, and the cap rate, that option 1 is the best option in this scenario. So if I had $1 million to spend and wanted to get the best return, I would be going with option 1. Well, there you have it. That's how I analyse various Airbnb opportunities. I hope there's some tools in there that you can use when you're looking to invest in either short-term rental accommodation or other type of real estate investments. Just a couple of things to keep in mind in that short-term rental area. Those models don't take into account everything. There's a couple of things that you probably need to keep in mind. One is market saturation. If you get a period of a lot of people jumping on to host Airbnbs in your area, that's going to increase the supply. It's the old economic supply versus demand. Supply goes up compared to demand. You may see the daily prices that you're able to charge be reduced. So keep those sort of things in mind as well, that you are involved in a competitive business environment once you enter that short-term rental space. But again, hope there's something in there that you can take away. Good luck with it, with your investing, and catch you soon. Cheers.